Good morning, traders. Today is Tuesday, September 28th. My name is Charles, and this is the Pirate Traders live stream. Okay, well, I'm starting out this morning looking at the daily candlesticks here because something very, very interesting happened last night, which was we had a big sell-off. And that big sell-off was very interesting to me because it pushed us back below that 50 daily moving average. And now if we step back and look at it, on the daily candles, it kind of looks like a dead cat bounce, right? It kind of looks like we just had a massive pullback, did a retracement, and then found resistance at the 20 moving average, the 20 daily moving average, and now the market's rolling back over for further downside continuation. Okay, so I wanted to start with the daily to say that's something noteworthy right there. Just seeing that pattern and that break below the 50 could be bearish. Okay. However, I think it's just based on news. When we zoom out here, we zoom in here, and we look at the 15-minute candles, we can see that the sell-off happened all at once, that the overnight market was rotating kind of around the lows of yesterday's trade. They had an attempt to push higher, and then out of nowhere, they just started massively selling off and have been rotating since then. So this, in my mind, means it's probably news generated, which means we could just absorb it today in the regular trading hours, no problem. May have had something to do with the treasury yields. I looked this morning, but I couldn't see specifically what would have caused that sell-off. So that's a sort of counter narrative, right? If the reason that we sold off is because on a larger time basis, this was just a giant dead cat bounce, that's very bearish. But if it was just a single piece of news, the market can absorb that and push higher. Okay. So what are we looking at this morning when we look at the market profile? What jumps out at me? Well, first and foremost, I was seeing this area that we were building in yesterday as a potential balancing area that has now failed. Okay. So I'm going to no longer consider that a balancing area. If we get back in there, I can reconsider it again. But for now, I'm going to assume that the market is starting a new trend to the downside. We will have a massive gap this morning. Okay, so the gap is from yesterday's low to wherever the market opens. Okay. So that's a pretty big gap. So the first thing I'm looking at is gap rules are in play. I'll be thinking to myself, what does the market try to do when it opens this morning? Is it going to try to fill that gap? Now, overnight inventory is a majority net short, so we should get somewhat of a counter auction to the upside attempting to fill that gap. And what they do with it will be a big indicator of where we're going to move forward for the rest of the day. So if they attempt to fill the gap, if they start trying to trade higher and they can't get up any higher, they find resistance and start selling off again, that is bearish as what we call a gap and go, and the market will generally continue in that direction. Same thing if the market just opens and immediately starts to sell off, that is also a gap and go, which is bearish for continuation in that direction. Okay. But if the market starts trading higher and it doesn't find resistance, we target the gap fill, getting up here to yesterday's low. If we get there, we then look for resistance at yesterday's low. Finding it is likely to make us go rotational, more so than necessary because it's such a big gap. If we're able to fill the gap, I doubt we're going to just massively sell off from there. Odds are we would fail to fill if that's what's going to happen. So if we are able to fill the gap and we don't get much upside continuation, we're likely to just rotate at lower prices. If we fill the gap and it keeps going, that is the most bullish scenario. And once again, we're sort of re-entering a balancing area. So that increases the odds of a rotation to the upper end of balance, which still has that poor high in need of repair. So essentially, as the market trades higher first thing this morning, I don't want to jump into a trade unless it's just like a very quick scalp trade, because at any moment, the market could find resistance and start selling off again. But if we get up to yesterday's high and find resistance there, that is tradable. Looking at rotation or breaking into yesterday's trade is bullish for continuation higher. Okay. I imagine whatever's going to happen this morning will happen very quickly. So within the first half an hour of a day, we should have an idea of whether we're going to try to fill the gap or we're going to continue lower. Opening outside of the previous day's range means we're not necessarily likely to get chop. The market will probably pick a direction and start moving right away. Okay, the market is open. So again, we're expecting somewhat of a counter auction, somewhat of a push higher here today, first thing in the morning, because of the amount of inventory that is still short from the overnight. If we don't get that, that is the first bearish signal. If we do get it, we're looking for resistance before we're able to fill the gap. That would also be bearish as a gap and go. Okay, so we've begun the counter auction to the upside. We can see these big red arrows. That is the gap that needs filling. As far as support and resistance goes for today, we're just looking at previous volume nodes. So there's some resistance from the overnight just above us right here around the 4207, 4208, or sorry, 4407, 4408 level. And below we've got support, from the from 922 around the 4393 level, and then down there by the POC at 4387. So those would be the first support to the downside. It looks like the overnight perfectly used this the node of volume here. So one thing we often look at with volume is like as the volume gets bigger here, right? When that is acting as support, it should be fading off here in the same area, right? So you can see where the volume gets less and less here, it also gets less and less here. So that was acting as good support for the overnight. Okay, passing back through the opening price is bearish as a potential failure of filling the gap. Market internals opening bearish, but that's to be expected with the overnight inventory. So far it's feeling like a gap and go, which is a bearish signal, as the market should have had a counter auction to the upside, which was very, very small. It built up this node of volume, which we would now assume will act as resistance, and then pass back through the opening price. All right, I'm going to jump in the chat here to see if anybody gave us any ideas for the news that would have caused the sell-off in the overnight. Good morning to Mangala. Good to see you. Naif, good to see you. Hope you took profits quick on your counter auction trade. RK Leon, good morning to you. Shubaho Deep, good to see you. Good morning. Fausto, good morning to you. David, good to see you. Nicholas, good morning. All right, internals are showing some buyers starting to step in here. Still feels like a gap and go to me. Would certainly not go long here. Would need to see it get back above the opening price before that would interest me. Fausto saying this was totally expected to me. While I cut my swing off yesterday, but does not mean the bull case is over. Of course not. But it's very bearish, right? We can't ignore market-generated information. Breaking below that 50 is bearish, especially since we got resistance on the 20 that immediately pushed us back down and through. Those are bearish signals, right? The gap and go this morning is bearish. So the internals, they're recovering. Too early to say. But can't ignore market-generated information. Miles says yields broke trend. Yeah, so the yields were what may have caused that sell-off. Fausto, news and excuse. They were always going to test the breakdown candle low and try to fill the SPY gap, which they may still do today. Yeah, I'm not familiar with where the gap would be on SPY. Amir, good morning to you. Miles, good morning to you. Mangala, bulls could bully the base? The BAs? I don't know what that means. Jose, good morning to you. Vincent, good morning. D is back with us. Good to see you. Rocket Fed shakeup, insider trading. Oh, yeah, I saw that. 2 of the people from the Fed retired or whatever, quit because of their insider trading. Philip, good morning to you. Salmon River back with us. Good to see you. C. Marshall, welcome. Okay, buyers are stepping in here. We're starting to build some support. So the next job of the market is to push through the resistance that we created just above the open here. Harry, ES support, like I said, we'll just watch the volume nodes, right? Right now, we're finding support right at the upper end of this node from the 22nd. But there's lots of areas in here where we could find support. You know what I mean? Support here, 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 here. I mean, there's just so much volume that traded in there that day that any of that could act as support for the market. But I would say getting below the overnight low would be much more bearish. People will pile on at that level. Advancers versus decliners is beautifully lifting here. So that's a sign they're buying the stocks. Arthur, market's worried about the Fed and government running out of money? No, they're not. The Fed can print all the money they want. James, another potential could be the debt ceiling conversation, although that shouldn't have caused a massive sell-off. That's priced in, I think. Miles, am I going bearish yet? No, not at all. I mean, I feel bearish, but I'm not going to put it on my chart yet because that's a sign that I'm only trading short, and I'm just not certain yet. I'm waiting to see. The internals are giving me hope that buyers are stepping in here. But like I said, if that overnight low breaks, it'll start getting a lot more bearish. I will say if we do push higher and we get above this node, I would go long for a potential gap fill. But I wouldn't go long in here hoping that it's going to become support. That's just a guess. I definitely don't like the taper here at the low. Short-term traders are buying up these exact levels over and over again. So all it takes is the market to push through there, and then they get squeezed very quickly, and they exit those trades. So we'd rather see good taper like this in the overnight. Marshall. See Marshall. Yeah. So the basic idea is you have to think about the market like a two-way auction process, right? When an auctioneer brings out a painting in an art auction and he says, do I have anybody that's willing to pay 1,000? 1,000? Do I hear 1,000? And like 10 paddles go up. There's a lot of people that want to buy that piece of art at that price, right? So then he lifts it up, right? Do I hear 2,000? Do I hear 3,000? And slowly but surely, there's less and less people that are willing to pay until it gets up to, say, 5,000. And then there's only 2 paddles going up. So he goes 5,100, 5,200, and he pushes it as far as he can. Okay, this node is starting to break. So he pushes it as far as he can. And then at the end, there's 1 paddle that goes up, right? That's the last person that's willing to pay that price for that piece of art. Boom. And then it's sold to him. Well, an art auction is just a one-way auction process. The price can only go one direction. But in the market, it's 2 ways because there's unlimited shares. There's not one piece of art for sale. There's unlimited ES futures contracts for sale. So they push the price as high up as they can, and then the sellers take over and start pushing it down. But if there were, 50 hands that went up at $1,000, right? And they're pushing it down, they push it down from 3,000 to 2,000, 1,000, odds are somebody's going to lift their paddle. There were 10 people willing to pay it the first go around at that level. Why wouldn't there be somebody willing to pay it this time around? It's the same ES contract. Nothing has changed. If they were willing to pay at that price level, they should be willing to pay at that price level again today. So that's basically the idea. Where you see the big nodes of volume, that's where the market was happy to do business. People were happy to buy there. They were happy to buy there. They were happy to buy there. So the assumption the market makes is as it pushes back into those levels, there should be buyers there. And so it kind of becomes like a self-fulfilling prophecy where, because we assume buyers will be there, we buy there, and then we create that support or resistance. Okay, getting bearish here. So that's what I was talking about with if this node broke, we'd get a quick spike down because these sellers would be weak hands. I'm sorry, these buyers would be weak hands buyers. So right now we've still got a gap and go on bearish internals. The last major support is going to be right around 43.7825. If that breaks, we're likely looking at a massive sell-off today, as that is where the fear and panic will begin to set in. Ooh, the panic. Okay, broke that overnight low. Now we are getting very thin volume here, so we should need to push back up and backfill some of this. Looking for resistance. This is more of a liquidation. Some of the longs from the overnight here getting squeezed out of their trades. So again, we got a level here at 89 with only 150 contracts. That needs backfilling. Another one up here at 92. So we're looking for resistance on this cliff right here, on this node of volume right at the halfback. Okay, so once again, this little node of volume right here at 78, that is the last major support we have before further downside continuation. If that breaks, we're heading down towards this area here. So if 78 breaks, we're heading towards 67. And Donkey, yeah, the market is rigged to go up, but just step out and look at a daily chart right now, and you might find yourself questioning that belief. You might find yourself saying, "Oh wait, this market can go down." NIAF, what are the odds that we see the NQ at 14,700? I mean, I can't tell you exactly what the odds would be, but that would be a massive sell-off. That would be double the range we've already done, including the overnight, so I don't think we'd get there today. Okay, we're now testing the very bottom end of this last node of support we have here. Again, if that breaks, we're going 10 points lower. Getting a little oversold here on the ticks. There you go. It's breaking. Arthur the Big Short. Well, it's too late now for the Big Short. If you were in it earlier, it would have been. Miles, yeah, that's something I struggle with as well. I've taken 2 short trades already today, and both of them I moved the stop and then got stopped out. It does happen. NQ seems to be seeking a bottom. Let's jump over and take a look. Okay. NQ, not quite as big a gap. And they've just barely broken their overnight low. But yeah, they're bringing in a lot of volume here. So if this support around 14,915 can't hold, the next one's down here at 14,837. So same as ES, it's right on its last support. If that breaks, you're looking at further downside continuation. Powell scheduled to speak in 3 minutes? I don't know. I haven't heard about that. No, I don't see anything about that. All right. Well, we're stuck in this little zone here between 82 and 85, bouncing around. Whichever direction we break might give us a signal of where it's going to go. Still have a lot of backfilling that needs to happen up here, though. So I'm not going to get super bullish just yet. Oh, okay. So I guess he is testifying in uno momento. That's just what the market needs. Oh, and the Treasury Secretary. Oh, boy. Okay, so we're printing the B period here. If we push down below the A period low, not only are we breaking that last support that we have left behind, but we are beginning the process of one time framing lower, which is bearish. Okay, so the market is now one time framing lower. And we are breaking that last little bit of support we had. So looking to pull down into the range from 921, looking for support in there. Starts at about 70. Nathan just smashed the like button. Thank you, brother. Thank you for the reminder. Everyone, please smash that like button. Support the channel. Support the pirate. Make me feel good on a Tuesday morning. Okay, well, the internals are giving us some mixed signals here. They are the breadth and the advancers versus decliners clearly bearish, right? The ticks are kind of starting to trend higher, but they're not able to get above the zero line. So that's like it's slightly bullish that they're trending higher, meaning more and more buyers are stepping in. But until they get above that zero line, the sellers are still in charge. They're still batting them down at every new resistance, right? Head and shoulders forming on the daily. Yeah, not super clean, but yeah. Okay, again, they're getting batted down every time they try to push up, they just instantly find resistance. No to volume, no to volume, no to volume, no to volume. That's what a trend day looks like. Every time they push up into the previous node, they get slapped right back down. Knife betting a small account on this long. Someone take the mouse away from me. Yeah, brother, my argument would be if the market's going to find support here and it's going to trade back up, why do you have to get in at the very bottom when you're fighting the trend? You're fighting the momentum. You're fighting the internals. You're fighting every market generated signal and trying to go opposite of it. Why not just wait? You know what I mean? You could go long up here when we get above half back and look at all the money you can make on the way back up. Lots and lots of money to be made with significantly less risk of being wrong. Going long here is just gambling. I mean, literally, right now, the Fed's about to talk. That could massively affect the way the market moves. Just to me, seems like a gamble. Miles, would I do my swing trading strategy in a bear market? No, absolutely not. That strategy is based on the past, right? It's based on what the market does. On the way up, the market tends to move consistently, but on the way down, it just does massive dips, and then it starts moving back up again. So no, I wouldn't try to short on a swing basis. No edge in that. You have to be an innovator and catch it at the top. But you can definitely short it as a day trader. No doubt about it. Not yet. I'm just trying to feel something. That's great. Uh, yeah, 400 is not that bad. You can make that back quick. But again, it's a matter of teaching yourself how to be a trader. That's what I'm talking about. You, and this is just my opinion, the way I trade. You want to trade like a casino. You want to be playing the odds. You don't want to be just guessing that this is the moment where the market's going to find support and turn around when all the odds are against that being the case. Literally, the only thing that you could look at as a reason to buy here is the fact that there's former support there. There's volume, and that we're finding support as soon as we enter this volume. Like, that's an argument. But you can't really claim the ticks because they haven't been able to get above the zero line. All the other internals are pointing straight down. And we're trending lower. So well, Naif, I've got great news for you. I've got wonderful news. Just this morning, I finally finished a behemoth of an edit that I've been working on for months. And it's a hypnosis track that you can listen to while you fall asleep at night that will help program in that concept of trading the odds as opposed to trading gambles. And I should be dropping it on the YouTube channel by tomorrow. Yeah, hypnosis, dude. Yes, sir. Hypnosis is the most effective way to change the subconscious of the adult mind. Yes, it's my voice. Yes, sir. My voice in your ear, whispering. Well, actually, I deepened it so it doesn't sound quite like me. It sounds like a robot version of me. Um, it's like me as Batman in The Dark Knight. Salmon River. No, it really is. I designed it for myself. It's something I came up with years ago and tried to make for myself to listen to at night to help me reprogram. And I hated the sound of my own voice, so I kept re-recording it, re-recording it, and re-recording it. And finally, I just decided this past time, like, I might find it annoying to listen to my own voice, but but other people might benefit from it. Thomas, does Thinkorswim have the equivalent of my chart, by which I assume you mean market profile? It doesn't. It has something called monkey bars, which is very similar. It shows you where the value area is and stuff like that, but not quite. You really need proper market profile software to be able to see all the nuances that I look at. Donkey, what's going on, brother? So are you just feeling the pain from the calls you bought on the queue yesterday? Or are you just bored and wishing you would have jumped on the train? Well, the good news is, Donkey, I don't know how much more downside we've got here. Rob, 43.55 with no other context. Oh, that's where you think we're going? There should be some support in that area for sure, where the POC was on the 21st. But you guys just, all you have to do is watch how this thing's been trading, right? It's all day, it's been doing the same thing. It comes down, it finds support, it pushes back up into the node, then it fails, pushes back up into the node, fails, back up into the node, fails, back up into the node. It just did it just now here, fails. Like, that's a trend to the downside. This is not a difficult day to read. Yeah, that 100 daily moving average is on the Z contract is sitting at 43.2475. Aaron, then why don't I jump in and continuously look for the reversal? Need to reprogram my mind? Yeah, I mean the basic idea is you want to just go with the trend. You jump into it anywhere where it's finding resistance, and you can trade it however you want. You can stay in the trade and let it keep pushing. You can, sell the dip and then buy the dip and then sell the rally again, like that. But yeah, the first thing that you notice is, what is the market doing? Right now it's trending down. And then you just ask yourself, how do I trade the downtrend? You don't try to fight the trend. You don't try to go the opposite. In this lies madness. Aaron, you have a hard time jumping in. That's fine too. That's okay. It's totally fine to miss a trade if, psychologically you're uncertain about getting into it. Cindy Matt, yeah, dude, very hard to do on a range on this big of a range. Because remember, like we could print the C period and it could push all the way back up to here and still not get the cessation, still stay in the downtrend and push back again. So it'd be very difficult if you're entering down here to wait for cessation to exit. What would have been the most brilliant play would have been to short passing back through the opening price today. That's a Peter Resnicek trade he talks about all the time. When they attempt to fill a gap, you short it on the pass back through the open the other direction. Man, if you'd have just jumped in that and been sitting in it waiting for cessation right now, ooh, money, money, money. Yeah, Matt, that was a great trade. Sellers are still piling on here. This trend is not over. All right, first sign the buyers are making a fight here. Can they get above that zero line? That is, of course, the signal that there are more buyers than sellers in the market, which is what we need if we want to stop the downtrend and start pushing back up. Not yet, Naif. Don't trust it until they get above the zero line. Every other time that this has happened, what happens? They get back up into resistance, and then they get smacked down again. So the assumption is that's what's going to happen here. The market hasn't given us a signal that the trend is over yet. Almost did. Almost made it. But then the second they got above that zero line, smacked again. Right? So they're just still trending lower. Blame the game on the hill. I don't know. It's not like they're gonna vote to lift the debt ceiling. Of course, they always do. Yeah, and Naif, you don't have to leave for the day either. You can always just go for a walk, man. Just completely stop watching the markets for a few minutes, and separate your mind from what's happening. Watch a TV show or something, and then come back with fresh eyes, or come back tomorrow. Either way. Man, speaking of needing backfilling, there's a level with only 85 contracts here at 64.75. That definitely needs to be backfilled. Yeah, no, but don't listen to me on the speakers. Completely disconnect from the market. Is that your trick, Donkey? Uh, all right, backfilling. Can they finally break this zero line on the ticks? It's not great taper, but it's not terrible either. It could be a low. All right, with the printing of the C period, we've left behind a lot of single prints in the B period. So those are also likely to get backfilled at some point today. So the trend up in the ticks here is showing us that the buyers, more and more buyers, have been stepping in, trying to save this market. And if they can get above and stay above this zero line, it shows that they're winning, that they're finally beating the sellers. All right, guys. Well, with that, I shall bid you all farewell. Please smash that like button on your way out if you don't mind. And if you haven't yet, please hit the subscribe, join the party, and keep up with what's going on. Otherwise, I will see you all here tomorrow morning. If you're not a member of the Brigade, it only costs $10 a month, and you get to hang out for the rest of the trading day. Link in the bio. If you are a member of the Brigade, I shall see you in that stream momentarily. Thank you very much, guys. Have a good one.